For more on Gap and the retail picture, let's bring in BMO Capital's Simeon Siegel. Simeon, it's great to have you on. I want to start right there. When I see that Old Navy had 1% positive same-store sales, it signals to me the same thing that Ross Stores and TJX signal to me, and that is that consumers are focused on value right now, and they're finding it maybe in some of these off-price retailers or some of these brands that typically tend to be more affordable.
Hey, good to see you. So I think that's perfectly put. I mean, we watched TJX's performance yesterday, traffic-driven comps. We just saw Ross just now, and now you have that Old Navy comment. I do think we should reflect on the fact that you and I are getting very excited about a one. So I think there's a lot having to do with expectations and bars, and Courtney said it perfectly. To me, the more interesting I'm listening to her is this notion of promotions being down, looking at that gross margins. I think that there is a health conversation that we want to see. So we want the revenues to grow, but we want them to grow healthily. That's, I think, the 1-2 punch.
Okay. And we are seeing that. We're seeing that really across the board. This focus on cost controls, lower freight costs, lower inventories, less promos. Is this the new normal as we have now come out of the pandemic? We've come out of all that pull forward that we saw in demand for retail and then that shift from goods to services? Or is this really a sign, a more meaningful sign that as disinflation takes root, and sales that have been pressured, that the consumer is slowing and slowing in a more meaningful way?
I think it's today's normal. I think we learned during the pandemic calling something a new normal is a dangerous precedent because it changes every minute. But I think we are seeing, listen, there's no question that when you and I talk about Old Navy, Ross, TJ working, there's no question that sounds like a trade down impact. On the other hand, you can see a lot of big box companies. You can see a lot of other businesses that theoretically are catering to a similar customer that aren't calling out similar trends. And on the third hand, if we can have three, I'm sure Lulu will tell us that business is growing as well. So I think that there is no question we're seeing this aspect and we should continue to watch it. But on the other hand, I think that there is nuance. I think the broad brushstroke is a little bit dangerous. And I think we'll see plenty of businesses that are catering to more aspirational customer still seeing nice growth. And so I think it goes more to this aspect of, is the company actually doing the job? Is the company forecasting their business appropriately? And I think that's something you and I haven't been able to say in a long time because supply chain threw a wrench in that. When you don't know what product you're going to get overseas, it doesn't help if you're a good planner. We're back. I would say your new normal now is that we're back to being able to plan your business. Those that plan it well and know their customer well, I think will be rewarded with results.
All right. So, I mean, strong other hand energy on a Thursday. I'm with it. So, Gap, Abercrombie, or American Eagle? Because Gap has its own sort of turnaround issues. American Eagle's getting ready to report. And Abercrombie, I'm old enough to remember in the 90s when Gap was cool. It's like Abercrombie has taken a lot of that away.
Oh, you know that problem in your head when you hear it and like you're saying, did I just say other hand again? So I'm with you. Thanks for calling me out on it.
Oh, I know.
Listen, I think that it is fascinating that when you look at a company like Bath & Body Works that just reported today and is getting knocked for being a mall-based retailer, and then you think about the fact that we're looking at Gap, Abercrombie, and Eagle, as you just called out, which are mall-based retailers selling apparel, to teens, which generally has been viewed as the most toxic group, and yet they can work. I think it goes back to this notion of you have to look at the company. You have to go back to that nuance. And so Gap just showed us that at least for right now, they can continue that momentum. We'll get that. We'll see from the other two next week. There's no reason to think they're going to stop right now. But I think at some point, we're going to look back and we're going to say, okay, as we think about what these businesses are worth, going back to Morgan's first point, we can't always just rely on the consensus on the sentiment. At some point, they actually are worth something from an intrinsic value. And that's when I think we're going to have to start deciding, did some of these stocks get away from us? In October, there was nothing but despair. The first 2 weeks of November, my group is up double digits. So I think there's an element there where we'll want to actually, okay, let's get the catalyst. And then 2 weeks later, let's see, where do you want to, what's the multiple you want to pay for them?